Hello, dividend growth stock investors. Happy Sunday to you. It is May 18th, and it is time to go over the 4 tiers. That is right. This channel is focused on 60 individual high-quality dividend growth stocks, split into 4 separate categories or tiers based on the age and time horizon of the investor. And as you can imagine, based on the title card here, United Healthcare is one that has absolutely caught my eye. United Healthcare is, of course, one of the 60 dividend growth stocks that this channel covers. And it is in the tier 1 category, meaning that it is one that I find best for the younger investor aged 18 to 30 years old. But at these prices, can any of us pass this one up right now, or is UNH just simply catching a falling knife, as some of you might say? Well, we're definitely going to go into that and more. Thank you for stopping by. Now, I'm not a professional financial advisor. Do your own due diligence prior to investing your hard-earned money. This channel is for entertainment purposes only. Really quickly, for those of you who are new and for those of you who are not, it is worth reminding everyone that my personal strategy is as follows. 50% of new money every single week goes into age-appropriate, dividend-themed ETFs for automatic diversification, and I am looking for single stocks yielding 30% or more above their 4-year average yield. Unless they are one of my top 10 personal favorite stocks, then I'm just waiting for 20% or more above the 4-year average yield. Now, I remain in my personal age tier, which is tier 2, the age 31 to 41-year-old investors. I am 41 until November of this year, and then I'll graduate into tier 3. And then, but if there's something yielding 50% or more above the 4-year average yield in a different tier, I think that is green light is good to go on that one, no matter what your age is, if it makes sense for your yield and time horizon at that point. And if there's not a buyable stock within my personal tier, I will still invest the planned amount of money that I had set aside for the week. I will just either look for the super undervalued stocks in the other tiers, or I'll put more money into ETFs. It is as simple as that. So before I jump into the spreadsheet here, you guys, let's just take a quick look at UNH over here on Seeking Alpha. I'm not a Seeking Alpha premium member, so if you go to Seeking Alpha, you will see the same thing that I'm seeing here, which is United Health at $291 a share, down 44% over the last year. This was a stock that typically traded between 450 on the low end to 600-ish on the high end. It started to go down here in the month of May. It dipped down below $300 a share and then completely tanked down into the mid 200s briefly before quickly rebounding to the high 200s. What in the world is going on? Well, new CEO. There's some investigations going on with them regarding Medicare fraud that I've looked into. This is a tough time for United Health. There is a lot of transition that's happening right now. A lot of different opinions on it. As you can see here, Tribal Research thinks that this is worth it considering it's at the right price. Sun Garden Investment Publishing says that it can get worse. You should sell now. CYN Research, United Health stock plunges but looks cheap on valuation models. Vlay Kirshner, United Health joins scandal stock lists. And then Victor Durganov says, should you buy this falling knife? Exactly what I'm wondering here. Another interesting thing that I saw here too, where is it? The new United Health CEO added $25 million worth of United Health stock. I don't think that that's necessarily a bad idea, especially for the new CEO. Come in, buy up a big chunk of it while it's down. We're going to take a look at the dividends tab here really quick, just to remind everyone why this is on my list, why it's in that tier 1 18 to 30-year-old category. So we've got a low payout ratio. This is subject to change. They suspended their guidance while they're going through this transition, but it was at 30% prior to all of that. I can't imagine it's going to go up above 40% after this. We'll have to wait and see. Currently yielding in the high 2% range. It's got a 15-year dividend growth streak with a 14.22% 5-year growth rate. Very, very rapid dividend growth. And we can take a look at that here on the growth tab. Going back the last 10 years, you can see United Health On the annual payout growth column, 12, 13, 14, 15, 16, 20, 20, 21, 26, 33. So as they've gone on their little streak here of 15 plus years, it has gradually trickled down, but still comfortably in the double digits, which is what we want out of that tier 1 category. What do you all think about United Health? So here we are, guys. We're going to jump into the spreadsheet like we do each and every single week. Starting with the tier 1, aforementioned, this is that 18 to 30-year-old investor sorted by the valuation tab, where I'm comparing the 4-year average dividend yield to the current day dividend yield to see how far off the mark that is. United Health finally has dethroned Nike. Nike is finally not the most undervalued stock in tier 1 after months and months and months of sitting up there. Nike says, thank you, United Health, for all of the trouble that you're going through. Getting us down here into the number 2 spot feels pretty good if you are Nike. Still think both are remarkably undervalued, along with the dividend king Nordson. But with this tier 1 group, we're typically going to be looking at stocks that are yielding on average about 1.5%. Some are going to be a little less than that. Some are going to be a little bit more. But wow, staying within your own tier, 18 to 30-year-old investors, you could grab yield in the high 2%. And you've still got a company with a track record of double-digit annual year-over-year dividend growth, which is what we want, well above 10% annual dividend growth cumulatively out of this particular group. United Health looks attractive to me. I added some, maybe a little bit too early. I got some, earlier in the week at 340. Then it crashed down to 250. I scooped up some more in the 260s to dollar cost average down. My average cost on United Health is sub $400 a share, thankfully. And so long as it stays down here below $400, I'm personally going to keep adding to it. Tier 2, 31 to 41-year-old investors, a little bit higher starting yield here in the 2.5 to 3.5% range, and high single-digit annual dividend growth, 7 to 9%. Target, Hershey, and Starbucks remain in the buy zone, with Target and Hershey really being way up there, joining UNH and Nike as stocks that are yielding 50% or more above their 4-year average yield. You can see it here for yourself, guys. Target 4-year average yield continues to creep up week by week. It's now up to 2.59%, but that current day yield of 4.54% is very attractive to me, and so is that 3.46% yield on Hershey. Both are plenty undervalued in my estimation. Starbucks, I'm a little bit tentative on Starbucks. I am probably going to be buying it. I just got used to buying it about 6 months ago when it was down in the low 70s. So maybe because I have recent memory of getting it that cheap, it makes the $85 mark seem not that great. But if I'm trusting my own metrics here, 2.85% yield compared to a 4-year average 2.18% yield certainly looks appealing. NextEra Energy, no longer in the buy zone. That one recovered enough from last week that I'm hitting the pause button on that one and just focusing more on the top 3 in this category. Tier 3, starting to slim down a little bit here too. Tier 3's had like 5-6 stocks in that green category there for a little while. Genuine Parts Company rebounded a bit, got back up into the high 120s. Still not an overvalued stock, but not as attractive as it was down in the $110 range. Archer Daniels Midland clawed its way back to $50. Let's see if it can get a little bit more momentum. Pepsi at $131 is my favorite of all 60 of the stocks here. This is in my personal top 10 favorite category, so if it's yielding just 20% or more above the 4-year average yield, I am excited to buy it, and it is yielding 52% above the 4-year average yield. So I am all about grabbing on to more Pepsi at 4.3% starting yield. You give me some Pepsi, some Hershey, and some UNH right now, it's going to be hard for me to focus on too much else. Now, I do still really like Johnson & Johnson here down in the low 150s, another top 10 favorite stock for me, 22% above the 4-year average yield. Johnson & Johnson, it's just so safe, so steady. They just did a 5% dividend increase last month. you're getting a 3.5% or just shy of that starting yield. Good enough combo factor for me. Johnson & Johnson, one of the bluest of the blue chip companies that you're going to find out there, and still keeping a very close eye on Chevron, you guys. I am really warming up to the idea of jumping in there and buying it, but I do want it to get down just a little bit below 140. I have to wait and see if it does, but that's going to be one that I'm paying very close attention to this week. I would not mind owning a bit more Chevron in my portfolio. I've got an okay position in it right now. I own quite a bit more Exxon, but Chevron just hasn't been super cheap in my estimation for a while now, and it's getting very attractive down here in the 140s. So definitely keeping a close eye on it. Tier 4, age 54 and older investors. So this is the group here where you're going to be focusing more on higher starting yield, but we still want to see good value for our money, especially when you are in those older years. You're running out of time to get to financial freedom, and why roll the dice on an individual single stock when there are so many quality ETFs out there that are going to give you high starting yield and automatic diversification? I don't see anything on this list that jumps out on me as a can't miss slam dunk value. There's probably not anything that if I'm 54 and older, I'm spending any money on right now anyway. There was a recent dividend increase to the monthly distribution from Main Street Capital. Main Street Capital has just had an excellent last 12 months or so. I would love to see this one get cheap again, but right now, it doesn't look like it's going to get that way. We'll just have to see. Maybe their CEO is going to switch out too. Real quick, guys, this is just a separate tab I keep for my personal top 10 favorite stocks. These are not new. They're all found on tiers 1, 2, or 3. Pepsi, J&J, Union Pacific, Procter & Gamble, McDonald's, Coke, Exxon, Microsoft, Waste Management, Visa. None of these outside of Pepsi and Johnson & Johnson are looking particularly cheap. So I will probably be continuing to add to Pep and J&J and reinvesting dividends only on the other ones instead of adding more money. All right, guys, so strategy is as follows. For the tier 1 investor, I generally will do 25% allocation into VOO, 15% small cap, 5% dividend appreciation, 5% international. VYMI is my only non-US stock holding. I'm going to be doing 5% in VYMI regardless of the age tier that I'm in. Tier 2, same 4, different allocation, 25% dividend appreciation, 15 S&P 500, 15 small cap. And then for tier 3, I'm looking at SCHD, VYM, and DHS as my three-headed monster, so to speak, of dividend ETFs. I like all three. Different strategies, very quality results on all of them, especially SCHD. I definitely understand if that's your favorite one, but I like to spread it around a little bit, just have some diversification, different strategies working for me. And then tier 4, SPYD for my stock exposure at 15%, and then 5% each into SPHY for high yield bonds, PFFA for preferred shares, MLPX for MLPs, Devo, JEPQ, and SPY for covered call ETFs. And because there wasn't anything in that tier 4 category that looked attractive, yet again, we're going to keep doing that ETF double down and go 30 10s all the way down the board until we get to VYMI. That'll make me 95% invested for the week. I'm going to throw that extra 5% if I'm in that tier 4 category into Pepsi because it is my favorite one of the entire group. Tier 1s, I'm going to be hitting Pepsi and UNH hard this week while touching on Nike, Nordson, Target, ADM, and J&J. Same thing for tier 2, although I would also be adding Starbucks into the mix there as well. And then for tier 3, it'll be Pepsi, Archer Daniels Midland, J&J Hormel, UNH Target, and Nike. So that's it for the week, you guys. Are you buying UNH? Are you worried about catching a falling knife? In my estimation, this is one for the younger investors that's meant to be held for the long term. So while it looks like a falling knife right now, 10 years from now, getting it for this price might be a steal. Let me know what you think.